The average cost of health insurance for a family in the United States if they retire early. That's a question on the minds of many looking to trade in the 9-to-5 grind for a hammock on a beach somewhere. You know, like somewhere near Portland, where the Willamette meets the Columbia, and the view is just prime real estate for relaxation. But let's not drift into daydreams just yet. The hard facts tell us that early retirement requires some serious financial planning, especially since you'll be giving up those cushy employer-sponsored health benefits, perhaps years before Medicare kicks in at 65. The costly tides of healthcare. On average, we're looking at a ballpark figure that'll hit your pocket harder than a foul ball at a baseball game. A comprehensive health insurance plan for a family could run anywhere from $1,200 to $2,000 per month. That's a major league expense, considering it can tally up to a sum in the vicinity of $14,400 to $24,000 annually. Now remember, folks, these are average costs, and the final figure can shoot up faster than a Portland foodie's interest in a new vegan donut shop. Factors like age, location, including our beloved Portland, and the type of plan you choose wield a massive influence over the total cost. Options for weathering the financial storm. Getting into specifics, the Affordable Care Act, ACA marketplaces are a solid starting point to shop around. Alternatively, COBRA allows you to extend your employer-provided coverage, though it's often more expensive since you'll be footing the whole bill without employer contributions. If you've got a sea of savings or investments to back you up, then dipping into those funds might be your personal life raft. But for many, this can feel like braving a tempest in a dinghy. It's not for the faint of heart. Casting a wider net for savings. Let's talk strategy. Opting for a high-deductible plan paired with a health savings account, HSA, could save some cash in the long term. These plans can be less expensive month to month, and the HSA has tax advantages and can roll over year to year. Don't forget about subsidies either. Depending on your income after you retire, because not everyone has a fat pension, you might qualify for a subsidy on the ACA exchange, which could significantly lower your monthly premiums. It's a bit like finding a great happy hour deal. You save money while still getting the essentials. An ounce of prevention. Now, one last nugget to chew on. It pays, quite literally, to take good care of yourself. Leading up to and during early retirement, maintaining a healthy lifestyle can prevent some of those bigger medical bills later on. We're talking regular exercise, proper nutrition, and all those good habits. It's not just about living longer, but affording the lifestyle too. In a nutshell, while the average cost of health insurance can look as daunting as a Mount Hood hike in the middle of winter, with some savvy planning and a proactive approach to your health, you can retire early without being capsized by healthcare costs. Just steer the ship carefully, navigate the options, and find what works best for your family. And whenever it feels overwhelming, hey, remember to breathe in that crisp Portland air for some much-needed perspective.